All right, guys, we'll get going in just a minute here. Right off the bat, I do apologize if the audio is a little bit off. So we did get evacuated for the fires this week, so I don't have my mic and my whole setup. This is literally just my laptop and AirPods. But yeah, we'll still do the webinar as planned. So hopefully everyone can hear me good. Okay, let's get going, guys. That is, yeah, 7 o'clock. Let's get going. All right, so let me just see. Can you guys see my screen okay right now? I'll take that as a no. 2 seconds, guys. Hey, guys. Yeah, not sure if you guys were listening to me or not. I just realized I was muted the whole time. Anyway, we're gonna get going here. Let's see if you can. You should be able to see my screen now. All right, cool.
Yeah, it works.
All right, good stuff. Peach, are you able to answer the Q&As as we go along?
Yeah, I'll try my best to do that.
All right. So again, guys, like I said, I'm not at my full setup due to the fires and stuff, so just bear with me. All right, so let's chat a little bit about why you guys are here and what my background is and what Peach's background is, and basically how the system came to be. So my goal here today is basically to show you guys a different approach to the markets. For all those that have been on Instagram and YouTube, you would have likely seen quite a few approaches to the market. We're going to show you our approach to the market, and we're basically going to talk about what the other approaches to the market are, such as SMC and support and resistance, your basic strategies. One of the main things I want to talk about is how the market's changed in the last 3 years. So, if you really want to see this on the charts, you can go back test 2017 to 2020, and then go back test 2020 to 2023. Chances are you're going to find a higher win rate in 2017 to 2020. So what happened in 2020? Well, we had a big world event. The US printed pretty much half of their money in all existence in that time. Inflation hit. And basically, the market's never been the same. In a lot of ways, it's similar, but in a lot of ways, a lot more manipulations are caused. In the last 2 years specifically, there's been a lot less retail traders involved, and this number always goes up and down statistically. So the less retail traders there is, the more manipulations we're going to have. And over time, the algorithm obviously gets updated. We're going to talk about how it gets updated in the coming slides here. Yeah, so how do I know our system, which is the range liquidity system, will work in the future? And it's been the main question I've been getting on Instagram before this webinar. We're going to go over that as well. And yeah, so let's just start looking at everything I want to go over, guys, and then we'll go over some questions. So I'm going to briefly tell you about myself, and then we're going to get into the good stuff. So before Forex, I was in the welding industry. I had my own welding business. What happened with that was I basically wanted to do something else. So I tried a lot of different things along the way. I started investing in stocks pretty young. I lost a lot of money in stocks. I never got any education in it. I just kind of thought I'd get rich overnight. So I just threw money at everything. And mostly penny stocks and garbage stocks and stuff. I thought I'd become, an overnight millionaire. That didn't work out. Then I went into crypto, and I would like to say that, like here it says I got about 40, 50 Ks in scams in crypto. That number is probably higher. At one go, somebody actually got me for 30 grand. But anyways, long story short, I made the majority of it back through all these altcoins or shit coins, as you want to call them. And eventually I got to see a friend of mine on a Zoom call, and he was trading gold. And I watched him make, I don't know, it was like 10 or 11K, and he made it in like probably 15 minutes. And that was pretty much the start of where I decided to get some education in the market. So I started out like everyone else, over leveraging, no stop loss, didn't really have a system. So I started out with support and resistance. Then I took some courses on fibs. Then I got into trading session highs and lows, which is actually really, really good strategy. This is actually where trading started changing for me. It didn't get very good R's, but the system itself was really good. Then I ended up getting into SMC. Got some payouts, blew accounts, got some more payouts, blew some more accounts. So I found some consistency in it, but not enough. What I realized though, before I got into SMC, my whole session low and high strategy, the fibs, the way I trade support and resistance, it was all based on candlestick language. And that's when I kind of realized that the candlestick language and the raw price action itself really mattered a lot more than pulling magical blocks or lines and expecting a trade to go off of it each time. And some of them obviously work, and we're going to get into why. There's a couple pictures of me before I got into Forex. So this is what I used to do. Obviously not a very fun job. Definitely come a long way since then. So that was my background. That's where I came from, guys. Just so you know. So now the obvious question is, why are you here? I'm gonna guess the majority of you have the same answer. You've seen some success in Forex, but you haven't seen as much as you'd like. And it's basically the way the algorithm works is it's designed to play on your emotions. You might have the bias right, but you might be early. So just to give you an example, I drew out a little diagram down here, and basically, let's say you were looking for sells. You get stopped out here. This would be your first blue block. That would be, let's say, a supply zone. Eventually you try another sell and you get stopped out again. Now at this point, you flip your bias and you start buying because you got chalks and you got flips and supports holding and trend lines holding, and your trade starts going in profit. Now you're feeling good. You think you're right. You think you're beating the market. You completely ignore the couple losses you have. And basically what ends up happening is your initial bias was likely right and price goes down. Long story short, you got manipulated a bunch of times, you lost a bunch of times, and you likely even had the right bias. So their idea is simple. They know people can get the bias rate sometimes, but they also know that if people get the bias rate and they can play on your emotions, they can get you to do the wrong things. You know, for those of you that are disciplined, you might have taken a couple of losses and stopped trading. For those of you that are newer to the game or still unsure of your edge, you likely would have overtraded and chased price. That's not random. That's all by design. These candles are designed to get a rise out of us. So that's kind of a generic version of how the algorithm works. And we're going to get into that a little bit more, guys. And we will get to questions too. Don't think I'm ignoring you guys. We will be looking at the questions in a little bit here. So right off the bat, I want to talk about the smart money concepts, as they call it, the marketing behind it. You guys have seen trade like the banks, trade like institutions, make 10, 20, 30, 40, 50, $100 every day. And it's marketed like that. And now you got, 20, 30, 40 accounts on Instagram that are all the Matrix and Neo, and they know the way, nobody does. They know the algorithm because, that's realistic. This has been the marketing on Instagram. It's straight out, it's bad marketing. It is. Can you get 1 to 10 hours with SMC? Absolutely. Are you going to get them every day? No. Are you going to get them consistently with a high win rate? No, you're not. And you probably are thinking, I know SMC traders that are profitable. I do too, and we're going to get to that. You're actually going to discover they're not profitable because of SMC, but because they understand raw price action and they're very strict with their rules. Mostly they trade higher time frame momentum. If they don't have that, they don't have an edge. So SMC itself is marketed as it's above and beyond retail. You're going to trade like the banks. Let's get one thing straight, guys. SMC, support and resistance, even our system, RLS, it's all retail. You're all retail traders. I'm a retail trader. Unless you are the bank physically capable of moving the market, you are retail. And I don't really care what style you trade. If you're not moving these candles with billions and billions and billions of dollars and you're building orders for days and weeks at a time to get an order, you are retail. And that's not a bad thing. It's just, I just want to put this SMC thing to rest because the trade like the bank shit really bothers me. It's not realistic. Nobody knows the bank algorithm to the full extent. We know where we can get profitable within the algorithm if certain things present. So that is how an edge is built. All right. So now that I've bragged on SMC a little bit, I want to show you a couple of charts. These are just some support and resistance trades, some demands. And what you're going to notice is 2 seconds, guys. I just got to figure out how I can annotate. Okay, good. All right. So what you're going to notice is you'll create something like a supply zone. You'll get the bias right, and price will stop you out and run in your direction. And this is very common where people can get the bias right, but they're still stopped out. What usually ends up happening is people are very focused on these magical blocks, support, resistance, supply, demand, and they think that's ultimately what the market is about. And to some extent, these blocks can work. But what these systems aren't teaching you is, what did we build before the price took off, and what did we do? So we did 2 things here. One, we created a trend line at the bottom. 2, we actually created this aggressive reaction. So a lot of people would have bought here because it's a support and resistance. This move here is called inducement. We induced a bunch of people into the wrong side of the market. And here you also have the last demand or the last supply that created a low. So for those that don't know, these are SMC traps. These are very common. And more often than not, we look for these zones to get run in our system before we even look for an entry. So step 1, we build liquidity. Step 2, we induce into the wrong side of the market. Step 3, we stop out the supply and demand guys. This will likely tap into something that'll resemble sell to buy wicks or maybe another supply zone. The zone itself isn't really important. What's important is that we build liquidity to take liquidity out. We induce people, then the move begins. And this happens on every time frame. This happens on multiple scales. Someone else might have tried buying at this demand. Someone else might have tried buying at this support and resistance. Ultimately, price is pushing down. You kind of get this supply chain or respected order flows, you call it. Once again, price does something similar as before. You create these support and resistance zones. You create these trend lines. And ultimately, what you're doing is you're building liquidity. And this would have taken out something valid to the left. The order flow in this is bearish. So the way the market moves is the same as we have here. You build liquidity, you induce people, you take them out, you go the other way. So this happens on every time frame. So we built liquidity. Here people are still likely selling. Here we induce people into buys. If you know what's going on, you can catch this inducement, but ultimately we induce people into buys just to take out enough liquidity to continue down. And this cycle repeats over and over and over. So for our system, we quite literally look for people to get stopped out to enter. Now, this is not a spike. What this is we're looking for areas like this that are a support and resistance zone, or we're looking for trend lines, and we're looking as to why are we building this trend line, and basically how can I use it as part of my trade plan. So a little bit different approach than the supply and demand guys, a little different approach than support resistance guys. Let's look at a couple more charts. Again, here you built a trend line, same thing. You induce people, you took out enough of the trend line to continue down. Our supply and demand guys would have pulled a supply here. Price doesn't come back. You create a support and resistance. What this is future liquidity being built. And how they get people is they generally give you at least one fake reaction. So here you got a fake reaction. You even got a partial trade. Now I don't show it here, but price ends up coming up more before it goes down. Ultimately, what you could see what these zones are doing is these zones respect just enough that you could see that your edge is sort of working, but it's not. But what these zones are actually doing is they're creating liquidity. And this is, again, the same thing over and over. You try to enter on this, support becomes resistance, and ultimately, when does price run? Price runs only after stopping people out. What happened here? We broke a level, we came back, mitigated this level, we created a liquidity-induced trap. We know that within our system, we only look for an entry after. And probably a lot of you guys are still thinking there's many profitable people with support and resistance. There absolutely is, but they're trading a higher time frame. They're trading raw price action more so itself than just these magical blocks I pulled across. And they've understood that these zones get manipulated a lot. So if they did want to take a trade here, they know to take a larger stop. I actually have a buddy that trades support and resistance, and he won't take the first tap. He won't even take the second tap unless it ran the first tap. And only once it stopped a bunch of people out on support and resistance will he even enter. So even though he trades support and resistance, he's essentially looking for people to get liquidated out of support and resistance zones before entering. And he doesn't even trade liquidity. He trades support and resistance, and he still waits for them to be stopped out. He's very profitable, but again, a modified version of what's taught. But you can see again, here we have a retail trend line, induce low so we can buy, induce high so we can sell. I think what ends up happening is price ends up coming up and then dumping. I don't believe I saved the other side of this, but we do have a couple more examples. And here you guys can see this in action once again. We build a trend line. We take something out. You would have taken out liquidity to the left. Now that we've taken out liquidity to the left, the market needs equilibrium. So what we're going to do is we're actually going to take out what we just built. We take it out. Price comes up, and essentially we're building liquidity again. Market takes out something to the left. All your supply and demand traders got taken out again. You would have likely had a bunch of support and resistance lines in here, which also got taken out. What happens after we liquidate the supply and demand zone, or the demand zone here? Same thing as before. All the liquidity that we just built, we took out liquidity. The market needs equilibrium, so the market's going to take all those people out. What's everyone going to do? That's a supply trader and a demand trader. They are going to look for sells and a chalk. And this is, I believe, on the 1 hour. So what the market will actually do is come in here and do something like this on the 1 minute. And it'll actually even give you a fake reaction to get a bunch of people induced into selling. And it'll do this about 3 or 4 times. So all of these candles are probably about 4 or 5 chalks, when in reality, this zone itself is liquidity. The reason it's liquidity is the same thing as I told you before. If you go to a higher time frame, like 4 hour, this would be the high that took out this low, which means this high's inducement. It's just the way the market moves. And ultimately, you could see how they'll build these trend lines, and these trend lines will do one of two things. They'll take out liquidity, or they are the liquidity. If they are the liquidity, usually we're seeking to take something else out and create more liquidity. This trend line here, same thing. You guys see what they did? They built it, induce, take out a bunch of supply traders, and go down. Same thing again. We build it, we induce. In this case, supply gets respected. And this is where I said some of you probably found some success. Some of these zones are holding. Some of these zones are giving you the sells you're looking for. So provided that you have the right bias, you can get some trades with any system. What ends up going wrong is people don't understand liquidity, and they don't understand why they get the bias right, but the move starts after they've been liquidated. And you got to think of how a large institution will take its order. By the way, just so you guys know, these are 5 minute, 15 minute, 1 hour, 4 hour, and daily. We have gold, euro, GBP, USD, and I think one of them is even US 30. So I completely picked random charts. These are not cherry picked perfect euro USD areas. I think this one's actually GJ, if I remember right. But this happens on every pair. This doesn't just work on euro USD. But ultimately, the same thing happens. The last one was more to show you how supply and demand work and trend lines work. This one's kind of how support and resistance works. So you can see how price will hold, and some guys will make some money in these sells, and then price will come up. What happens is the logic of support and resistance is going to be this. One, I have a trend line here that's going to hold. So a bunch of people will get stopped out here. And what they'll do on the lower time frame is often what they'll do is they'll react from that trend line to get people into sells. And then they'll take all those people out. And then the next thing they'll do is, if they do want to continue down, sometimes they'll let the trend line break, do a break and retest, start going, and then go down. So the algorithm knows these strategies, how people enter on break and retest. It knows chalks. At some point, we all are liquidity for a larger move. And what that ends up being is you might be looking at a 5 minute or a 1 hour move when really the daily is playing out. But what I want you to pay attention to here is how the support and resistance zones all get reactions. Some of them produce trade ideas, but ultimately they all build liquidity. But what did we tell you guys before? You build this trend line, you take out liquidity, you took out something of equal value. So now the algorithm has to come back, balance the market. What are we going to do? We're going to take this liquidity out. So we just took liquidity out to the sell side and the buy side. Now the algorithm is going to repeat what it did before. We build liquidity in a trend line. We take liquidity out to the downside. Obviously, the move's not ready to go down because more liquidity building is required. So whatever they took out here was sufficient enough to continue to build liquidity. So now we go to the high side. Once again, we start protecting the highs. At the same time, we're protecting the lows. What this whole thing is just a giant trend line they're building to ultimately take it out. And the same cycle repeats. We build liquidity, we take out liquidity, we come back and we take out all the liquidity we built for all the people that are really greedy and holding this into a long trade. Yes, some of these will run, but for the majority of the way the market moves is if we're ranging, we're going to balance the market. We're going to play on the edges. If the market is trending, it may not take this liquidity out right away. It'll be a future target. But in this case here, we're kind of moving sideways. You can see how these trend lines play a role. You could see all the places you would get induced to take buys here. You would get stopped out. Take sells on this trend line, stopped out. Sells on this trend line, stopped out. Whereas if you just sat back and looked, for example, if I seen something like this myself, I would enter here and I would aim for this low. I may break even, I may lose, I may get partials, all depends what presented itself. That would be my target. I know this low is going to go. When price comes up and does this and breaks through these trend lines, I would automatically flip my bias and target this liquidity because I know this liquidity wasn't sufficient to take this low. So that is the bonus of our system. I can sell this, and once, let's say, price breaks this trend line, let's say I took a stack and I lose a position here, maybe I break even here. By this point, I can already start buying, and I know the algorithm is going to target this liquidity because it wasn't sufficient enough to take this low. So I know once we target this, we're going to build liquidity again, and this low is still the target. So that's kind of how quick our bias changes. I can have a sell bias within 30 minutes. I realize my bias was wrong, and I now want to target what I was protecting. The only way you really get to this point is if you start looking at the market as where are the masses getting in and where are they getting stopped out? And where would support and resistance guys get in? Where would supply and demand guys get in? Where is the liquidity being built? That's ultimately the goal. So it's always we build liquidity, we target liquidity. If that target fails and price starts coming back up, we just target the other side of the liquidity because it's obviously not sufficient enough. More often than not, if the market wants to continue down, price will come up, take out a level of liquidity, and we'll either come up and rebalance and continue down, or we'll take this liquidity out and continue down. But ultimately, what I want you guys to look at is how I don't really care if it sells or buys. I am looking at where did we last take liquidity from and where's the liquidity being protected. So the support and resistance guys call these trend lines. We call them protected liquidity. So the way protected liquidity works is it's protected until an objective is completed. What the objective is, well, that is where you have to do some analyzation and look at your higher time frame and ultimately realize what kind of market you're in. And we're going to get to that, the different types of markets here. So you guys get the point on this one. Yeah, that's right. So what I just showed you guys, chalks or liquidity. Why liquidity? Because the majority of the time they will give you false reactions in actually just to build more liquidity. Yes, sometimes they work, but if you go take 30 chalk trades, I'm going to say 25 or 20 will likely lead to a loss or break even. That's again nothing against the system. That's just the algorithm knowing where these magical blocks lie and where the masses are going to get in. And just like I showed you guys, once they get stopped out, you often have the bias, right? And price will run. But yeah, that's kind of the basis of our system. We understand SMC, we understand SNR, and we understand where their stops are. We understand where the breakout traders would have their buy stops and sell stops. So we're ultimately looking for their levels as liquidity, and we're not interested until we see their level react, and then we see that reaction run. So ultimately, we want to see as many stopped out as possible before we enter. Yeah, sometimes we're wrong on real liquidity too. That's just the market. You can't be 100%. But by dialing in and seeing where these guys are likely getting in, and we see a run on their stops, we know we have a higher probability for our move. Fun fact, I don't know if a lot of you guys know this, but many brokers and prop firms, they actually sell your account matrix data. What that means is you're going to go trade and you win, lose, and break even for, let's say, 3 months. Your account matrix, every trade you took, what time you took it, how many per day, how you over leveraged. This is all data that is sold. Just like Amazon and Google and Apple are data companies, so are these prop firms and brokers. And no, they don't all sell your data, but many of them do. So this is where your algorithm updates come from. They have the most recent data, and they know basically what people are doing, how people are getting in. And you're probably asking what guarantees your system's going to work. We're going to get to that. I'm going to show you why our system will continue working no matter what. And this one here, where every trader started out, including myself, who do you think funded Baby Pips, and why is Baby Pips free for Forex traders? I'll leave that one for you guys to figure out. Next one, market structure is king. So you're gonna get to maybe a 2-week period where price moves like this and you made a bunch of money and it works and life is great. And then the next 6 weeks hit and price does something like that, and now market structure is no longer working. That's why our system's based on ranges and liquidity. Yes, I know that if the weekly's bearish, I'm going to catch more pips in the down direction. I don't need it to respect market structure to do that. And the biggest part of our system is understanding the liquidity and where the basic strategies would basically be getting in. And the more times we can see stops run on them, the more likely the move is going to play out for us. So this is what you're taught. This is picture perfect. It goes straight down. It goes straight up. It's a perfect world. None of these highs and lows are violated. This is a more realistic market structure. And you might zoom out on the weekly and be like, oh, it's bullish. Okay, well, you're a day trader. How do you trade all these structure points in between? Or do you just realize that not every point's a structure point, but it's more of a liquidity point and a range? Will market structure help you trade something like this? And we've all seen the market trend. We've all seen the market do this for weeks and months on end. If I told you that this market structure is bearish and you're only looking for sells, had you only sold in this range and you traded every day, this is 1 hour, by the way. I believe this was Euro GBP. Had you only sold because market structure is bearish, do you think you would have made money at the end of this? I think this is about a month of PA, maybe 3 weeks. The answer to that is likely no. So what does our system allow us to do? We completely eliminate market structure. We look at liquidity, we look at range balances, and essentially these would be all opportunities within our system of trades that go on different time frames. Are you going to catch all these? Absolutely not. Are you going to catch all of these without any losses? Definitely not. It's just showing you the opportunities of our system while not being confined to market structure. You might only catch, 4 or 5 of these, and you might lose 3 or 4 in the process. That's okay. That's trading. This is just to show you guys what our system is capable of. You can see the trades are going either direction based on range balances and liquidity. This is somewhere where if you only had a one-sided bias, you likely wouldn't do well. And that's kind of the power of our system. We look at ranges, we look at liquidity, and it doesn't come without its own challenges. We have to wait for setups like everyone else. We have to be patient. Sometimes we get stopped out on 2 liquidities and a third one goes. That's all part of trading. It's an edge that works long term. We've tested it. It works very well. Like I said to you guys, this is definitely possible within our system, but I'm not going to tell you you're going to catch all these trades. And the other thing I want to reiterate too is a lot of people are marketing this stuff with 1 pip stops and 2 pip stops, and that's just dumb. We don't teach our guys to do that. We teach our guys to cover what they need to cover so that they stay in the trade and have a higher hit rate. If that means you only get a 3R or a 4R or 5R instead of a 7R, well, so be it. We care about our traders' psychology. We care about getting these trades to actually work out. We don't really care about the 100R screenshot for Instagram. So that's kind of the basis of our system. We preach logic. Like I'll take an 8 pip stop on Euro entering on the 1 minute. SMC will tell you you need to have 2 pip stops. I can tell you that I have a higher hit rate than SMC. So that's kind of the logic of the system. That's the possibilities of it. Why does SMC and SNR stop me out and head in my direction? So we covered this a little bit. Manipulation is created to basically facilitate an order. What that means is if a institution, let's say, wants to take 100,000 lots of Euro USD and they want to buy, they can't just buy 100,000 lots of Euro USD, because for every buy, there must be a sell. So what they're going to do is they're going to basically manipulate people into sells. They're going to move price sideways. They're even willing to lose a lot of these positions themselves for the greater good of building an order. And what ultimately ends up happening is if they need on $100,000 or 100,000 lot buy order, they need 100,000 lots selling to them. Well, how do you create people selling to you? It's what I showed you guys before, where price will do something like this, and then it'll build, and then price goes down. And ultimately what they've done is they've built liquidity, they've induced people into sells, and then price will go like this and basically take off after their order is built. This is again by design. They need to manipulate to build orders. How do they manipulate? Large candles, which is inducing you. So a bunch of buy candles print that are large, you're going to right away, if you're not experienced, might think it's automatically buys, not look at anything else. We have SMC traps, which is your last supplier demand that put in a higher low. Support and resistance traps, where you're expecting the same zone to hold over and over and over and over, which is obviously not the case. Trendline traps, they're all designed to play on your emotions, and they know they just need to beat your mind. So how did they beat your mind? Lack of discipline. Where does lack of discipline come from? Lack of discipline comes from frustration and losing and ultimately feeling like shit about your trading. How does that happen? Well, you took 5 chalks, you lost. and instead of quitting at 3, you just kept trading. That's how they get you. And then you end up losing 9 trades in 1 runs, and you don't even make back what you lost. And that is how they get beginner traders. So like I said, guys, lack of discipline just comes from not understanding. If you know your system and you know where the probability lies in your favor, you can sit there and wait for your setup, even if it means no trade on that pair or no trade that day. That's fine. The biggest thing I see with new traders is they feel the need to be in a trade every day. That's not the case. Unfortunately, the market's just not a place you want to transact every day. Most days there's setups, not every day. All right. Now, what I was telling you guys before, the only profitless MC and SNR traders I know trade raw price action. And believe it or not, even though they don't call it liquidity, they trade liquidity paired with raw price action. So Elite created RLS, which is Peach and I. We modified the initial algo system. We took pieces from raw price action. We took pieces from fibs. We took pieces from the session high and low strategy. And we actually even took pieces from SMC and SNR in terms of we use them for liquidity. Again, this is not biased towards those types of trade styles. It's just you see the patterns in the market over and over. The algo runs after these masses are stopped out. Our system's edge is basically based on that, right? So we move from range to range. We don't have lower highs and higher lows and all that shit unless we are specifically using them for targets. So this is kind of the basis of our system. Let's say the higher time frame would be the daily range. So I would have a daily expectation. The mid time frame would be like something like the 1 hour. Why am I looking at the 1 hour? Well, we know we can't use daily candlestick language for trading intraday price action every day. Over the course of the week, the daily is going to play out, but maybe today in London session and then tomorrow in New York session, my more prominent ranges are going to be the mid time frame range, such as the 1 hour, and the lower time frame range, such as the 5 minute. Yes, it's all playing into the daily, but essentially that's how we're looking at it. I have a daily range, I have a 1 hour range, and I'm basically just looking how the market's building. Where did we take the lost liquidity? What does the market need to do? And which one of the 5 market conditions is the market currently in? Which I'm going to talk about in a sec as well. So this is the range liquidity system theory. There's 2 main market conditions. There's trending and there is consolidating. The problem with that is it's too generic and there's different types of trending and consolidating. So we have trending efficient. What this means is either the peaks and valleys got balanced or your 50 on the fib got hit. I could say that this range from here to here is balanced. So what this tells me is if the range is balanced and the market's running efficient, it is less likely that price needs to revisit these lows. So the likelihood of price coming back in something like this is less than price coming back of something like this. So I can obviously go both ways because, again, this is where, so let's say this is the daily. This is where the 1 hour will guide us and tell us what to do. But if I see something like this, there is a very high probability that the market will come balance this. I also know that if the market's running inefficient, it's got a lot of momentum. So I don't try to catch the momentum. In a scenario like this, I will basically follow the market until it shows me signs of, it's building liquidity. It took something out. Maybe now it's coming back down to rebalance the range. So it's very important to identify if I'm running efficient or inefficient.
Can I add something to this?
Yeah, go ahead.
So one thing is that whenever it's going efficient like this, what you have to know is that it will almost always start to go inefficient before we actually tap some important liquidity, because what the banks will do is actually target the important liquidity with big momentum, and after that's gone, you will start seeing the reversals. So that's some more value for you guys.
Yeah, to show you what Peach is talking about, so price will run efficient like this. We'll have a large liquidity pool up here somewhere. Then what price will do is, as Peach said, it'll completely run inefficient and it won't come back. This move is called inducement. And then what price will start doing is something like this, and many will say it's bullish flag or this or that. But essentially, from a liquidity perspective, we took out a important level of liquidity. We are now building liquidity. We need to either balance this range or take out a level of liquidity to continue. And the idea of this slow PA and trend line is everyone's going to say it's bullish. So everyone's actually going to have every demand, knowing demand pull here. And ultimately, a lot of people are going to keep trying to buy this because it's bullish. Whereas us, we're going to look at it as we just had this inefficient push after we were efficient. Price will likely seek to be efficient because we took out a level of liquidity, and our confirmation is going to be that price is starting to move slow. Because what does slow PA do, guys? Slow PA is playing on your emotions. People don't think the market has any push, so they don't have any interest in sells because they're only looking for buys. Why are we looking for buys? We're looking for buys because these inducement candles that created inefficiency are telling you to continue buying because it's bullish. And this is indeed bullish. But what if the market moves sideways for 3-4 days, building liquidity, wiping liquidity before it can continue? These are the zones where you need to figure out how to survive, how to trade in. That's fantastic. Your system works when the market's trending efficient and it's perfect. These conditions don't present themselves often enough. We're even going to talk about how traditional algo and lit is taught, and this is kind of where our system, RLS, is separated from them. So next we have the consolidating market conditions. So we broke these up into three. This is very important because here we're building liquidity to take something out. Here we're building liquidity to take something out. If I know I'm consolidating bearish, I know that I want to look for sells here. And the other thing I also know is that every time I run a low, I can look for a buy because I'm still consolidating and not trending. The same thing happens when I'm consolidating bullish. I am consistently going to look for buys because I expect these lows to be protected. But even though we are bullish, every time a high or a large liquidity pool gets run, I'm going to look for some kind of confirmation to sell back into it as well because we are ranging. And the way this is going to work is the majority of the time we build this and price will likely create a bunch of inefficiency, take out a large level of liquidity. Everyone in the world is bullish. Then we're going to come back and take all these guys out. And now the market's going to continue bullish because that's what it is on the weekly. That is how the market moves. So when you see these trend lines, think of them as liquidity being stacked. The question you need to ask yourself is, what is this liquidity being stacked for? What are we looking to take out? And once we take something out and we see an aggressive reaction, this so-called protected trend line is actually the target, even though you are bullish. The same thing would happen with this scenario. Even though you are bearish, as soon as I hit a liquidity pool, if price shows me signs of wanting to come up, I'm going to take this out. At this point, everybody starts buying. We're going to continue selling because we know how liquidity works. This is how the market moves. I've tested this on indices, on gold, on crypto, obviously Euro USD, which everybody with this system loves. This is it's not so much a generic system as much as being able to read what the market's showing you, which is again what separates our system from all the other lits and algos. And there's another problem with algo I'm going to touch on in a sec, but the 5 market conditions, guys. So just for those of you that are maybe you weren't paying attention, trending efficient, trending inefficient, consolidating bearish, consolidating sideways, consolidating bullish. If you can break up the market into one of these 5 conditions, you can really figure out how to navigate the market. If you're consolidating, why are you trying to follow trend only? If you're consolidating one direction, why are you trying to go against it constantly? You know, for example, here we're building a trend line. You're clearly taking highs. Why are you trying to sell from middle of the range? You wouldn't. And it's important to be able to categorize these. So if you guys take something away from me in this whole webinar, it is the 5 market conditions I want you to take away. And it is, who did we take out before you look for a trade that I want you to take away? And I don't care what your background is or what you learned. You've seen these patterns on the charts. This is no bullshit. You can go open any chart. You will find the same patterns I showed you on any time frame, 1 minute, 5 minute, 1 hour. It doesn't matter. All right, let's head to the next slide. Traditional algo. So traditional algo is basically made for ranges. And it works well in ranges. So what does that mean? You've all seen previous days highs and lows, and you can buy and sell at every one of them. Just like you can't sell at every support and resistance zone, and you can't sell at every supply and demand zone, you can't sell at every liquidity zone either. What are the rules? The rules are based around the 5 market conditions I gave you. You need to figure out what kind of market you're in before you decide if you're trending or you're moving sideways or what the case is. This is really important. So traditional algo and lit, from everyone that I've seen teach this stuff, it only works in a sideways market. As soon as the market starts trending, these systems don't do well. So which is again why RLS created a raw price action system with 5 market conditions. We don't care what the market's doing. We may not have a trade every day, but I can tell you right now, we can trade these markets a lot more accurately. So the majority of the systems, I would say 80% of them work in a trending market. Our system works in any market. That's the big separation. The biggest problem I'm seeing with algo right now is all these SMC communities are starting to market themselves as algo, and they're still trading chalks and they're still trading off zones they shouldn't be trading. And even though they're marketing themselves as algo, they are 100% SMC. So that's why we actually dumped the algo name, because we completely modified our system to fit any market conditions. I don't want to label us as algo. We are raw price action. We are a range liquidity system. And ultimately now the algo marketing is becoming as bad as SMC, because it's all the SMC guys saying they're algo to basically sell whatever it is they're pushing. I briefly looked at a few PDFs and a few courses, and the majority of them are all trading chalks. If you're trading chalks, you're not trading algo, not the true algo. If you're learning the traditional algo, it will not work in a trending market. It needs a lot of modification, I guess I should say. So that's where what I gave you guys is huge. The 5 market conditions, like maybe a lot of you don't think that's very valuable, but you can literally build a whole blueprint for your trading system off those 5 market conditions alone. You know, even if you're not part of Precision and you do your own thing, that's totally cool. Take away what I gave you in the webinar and tie it into your own system. And basically look, you know, you want to trade SMC, great. Look to trade SMC after they've been stopped out. You'll do really well. Why RLS will never become obsolete. So let's talk about what our system uses. Previous days highs and lows will never change. Asia highs and lows will never change. SMC traps will never change. Trendline traps will never change. SNR liquidity will never change. Chalks will never change. Range will always be balanced the same way via peaks and valleys or 50 on the fib. Session timings will never change unless all the world banks decide to change their business hours. We know the probability of this is not very high. If it did happen, we would change our timings to when the volume was high again, but it wouldn't happen. So these are our moving pieces for our system. What this allows us to do is whether the market is a 2017 market or where, everybody was able to make money a lot easier, or it's the market today that's manipulated a lot more. And by breaking everything up into liquidity and ranges and different market conditions, you will ultimately be able to trade anything regardless of what the market does. And the Forex cycle kind of goes like this. You have one, 2 to 3 years where everybody's in Forex. Then you have a year or two where there's low liquidity. So right now we're in very low retail liquidity season. So the market's been manipulating more than often. And what that means is instead of manipulating 3 times before a move, they might manipulate 5 or 6 times. So the system doesn't change. You just have to know what you're looking for. But these extra manipulations are detrimental to systems like SMC and SNR because where the zones are getting manipulated is the zones they're trading. So that's kind of the big difference with our system versus them. There's also very few people trading our system. So Elite itself is very small. We're not a monthly membership community. We never let in thousands of people, and there's a lot less people trading the way we trade. So yeah, that's kind of the basis of the system. So this is a quote from Einstein. Insanity is doing the same thing over and over and expecting different results. This is the definition of, I would say, 95% of Forex traders. They've been trading for, 1, 2, 3 years and it's not working, but they're doing the same shit. They're not changing anything. Instead of questioning the market, why isn't it working? Where am I getting stopped out? And when are the moves happening? Because that's where the backbone of our system came from me and Peach is we took the basics from everything we learned over the years, and then we took our own market data, and we basically had to fail a lot and learn where to make changes to get the edge to be more profitable. That's how you build a system. Essentially, we took the legwork out of it. So you obviously have your problems in trading. That's why you came. We told you guys we would deliver some value. I wanted you to mainly take away the 5 market conditions and the moves coming after the basically after the masses have been stopped out. So we've come up with 2 different things. So this is going to be Precision's first ever boot camp at the end of September. No one's ever done one. This is basically our absolute best product with everything A to Z. And then we created something, the Elite course. So a lot of people weren't able to join the Elite mentorship. The cost was too high for them, whether they were from a third world country or it was just too much money. So we decided to drop the Elite course for a very cheap price for the duration of the launch anyway. What our boot camp will focus on is basically all the stuff that we talked about, obviously in more detail. This isn't a system you're going to learn in 5 minutes. Liquidity's got a lot of rules to it. Ranges have a lot of rules to it. So we've decided to do it over 4 weekends. The boot camp itself is not a course. It is not recorded. the whole boot camp itself would be done live with Peach and I. And at the end of it, when you finished it, we're even going to throw in some live trading in the market with the boot camp members, as to show you guys the system live in action. So obviously the boot camps are, it's never been done. This is our first one, but this is pretty much as good as it gets for learning our system. That's kind of our plan, is 4-weekend boot camp and then switch to live trading to actually teach people how to trade. So since we are just launching the course, for all of those that didn't have the ability to learn liquidity properly, we've made our elite course just $500. You'll get access to the Discord. This is all the basics, everything you'll need to know to get you started. The price won't stay at $500 for very long, but since we're launching, probably for the first week or two, we'll keep it at that. So this will allow many of you to get involved in proper liquidity education, because like everything we're seeing on Instagram is wrong, and many of you are reaching out asking for cheaper liquidity education. So we decided to do this for you guys. Our boot camp is our high ticket item. It's $4,000 for a lifetime access, a complete mentorship. If you're an existing elite student, you get 50% off, as you've already paid $2,000 to be a part of elite. So your price will only be $2,000. Again, boot camp is no course. It is 100% all done live via Zoom. And honestly, guys, there's never been a better way of teaching. So we're pretty excited to drop this. For those of you that can't fit the schedule in or can't fit the budget in, we do have the course option, which is why we came out with it. With that being said, you will receive an email from us if you do want to enroll, with a link where you can sign up. And let's look at some questions. I'm interested in seeing what you do when you come to the charts. Like at the moment, when you see a chart, what is your thought process during that moment? So the basics for me are what kind of market conditions I'm in. Are we trending? Are we going sideways? What are the last liquidities that are taken? And basically, once I've done my daily analysis, I'll go down to the 1 hour and the 5 minute to see what the mid time frame will show me. And basically, I make my analysis from that. Let's see. Some of this is not English. Yeah, some people are extremely profitable using basic SMC. Yeah, they are. So Tyson, I actually know Tyson personally. Tyson's been trading for 7 years, and Tyson can read raw PA like no tomorrow. And Tyson is very well disciplined in what he looks for. He doesn't trade off every supply and demand, and he doesn't take every chop. If you actually looked at the way Tyson trades, it's a lot of raw price action, and it's not a basic SMC. Tyson is one of the few and above that I can actually say does well with it. I got another buddy named Brian that does very well with SMC. Brian trades more price action and momentum. So live trading would be in crypto. I don't trade crypto. I buy and hold crypto. Live trading would be probably gold, Euro, USD. That's the two I mainly trade for. How long will the elite course be valid with the $500? So probably for the first week or two. Chart examples. We don't have the time for that, guys. Today, you're welcome. What else do we have? What does the course include in regards of content and topics? So if you go to our website, precisionmarketsinc.com, everything is there as far as to what's there. You would have received an email with a link. You're welcome. Tyson from Fractal. Yes, we touched on that. Tyson is a very experienced trader. What would include, again, go to the website. Brian from Phantom. No, I don't have any affiliation to anybody from Phantom. Brian, a friend of mine. Most traders need to create their own trading plan. What should we do to have a practical trading plan? Okay, so the practical trading plan itself needs to, you need to have some kind of market data. I would say 3-4 months worth of back testing data, 3-4 months worth of live trades. You need to go and look where you're winning, where you're losing, look at the times you're getting in, look at how many pips it's running, look at how big your stops are, look at all that data, and ultimately you need to figure out where you make the most money in. And that's kind of what setup you take. And that should be more of what you focus on. Wherever your biggest losses are, for example, if the market's ranging, that's where all your losses come from. Well, maybe you shouldn't trade a ranging market with your system, and you should ultimately only trade a pair that's trending, or modify your edge, or learn liquidity. There's definitely some options. The man from Germany, you're welcome, buddy. Mr. Rob, I'd like to say a few things that might be helpful. I hope you can hear me out. I think you're doing a lot of things wrong. That's fantastic, bro. It's trading. There is no wrong or right. There's what works for me and what works for many. And for how small elite community is, we have quite a few funded traders and quite a few people that have, quit their job. We have a guy that was able to buy his mom an SUV that's now renovating his parents' house. Yeah. So I got to strongly disagree with you, but you're allowed to have an opinion. Hello, Mr. Rob. Can you do a top-down analysis of a chart? We won't be doing that today. Can you show a last week example? So, for those of you guys that want chart examples, you should join the Elite Broadcast channel. I dropped a few gold setups this week in there with charts. You'll probably be able to gain some insight and value out of that. We won't be doing any charts today, but that's not to say that I won't drop more chart examples into our broadcast channel in the near future. So definitely join up that channel. You get added to the Discord. Yes, you will be part of the course Discord community. You still will have Peach and I for access with the course. Obviously, you won't have access to the bootcamp material or the bootcamp live trading, but you will still be in the Discord. You will still be able to get support from us. So yeah, that's definitely it. Best time frame to identify liquidity. So this is kind of a loaded question, because the way liquidity is taught is, well, daily highs and lows is the liquidity, and that's what it's going to go off of. But in reality, what I just showed you with buildups, sometimes your liquidity for the daily move comes off the 5-minute. So to give it any time frame would be it wouldn't be appropriate. And to give you an example, is it's taught that previous weeks and months highs and lows are stronger than a 5-minute or an hourly liquidity. Yet we've seen 5-minute liquidity take out previous weeks highs and lows. And why is that? Obviously there's a lot more to liquidity aside from what time frame it came from. The liquidity itself is a full weekend topic in our boot camp. It's not a 5-minute ordeal. The basics and more than enough to get you started, I would say the course is more than enough to give you some liquidity knowledge. Any chance the Batcave can be available to the UK residents? So I don't actually get to choose where the broadcast channel works and where it doesn't. So I'm from Canada, and the channel just became available to me in the last 2 weeks. I imagine the UK will have the option to join it soon. If your country doesn't allow it, there's nothing I can do about that. Is the course in videos? Yeah, so the course is all videos, all recorded, and you'll get Discord access and support from us. What time frame gives the best view of the market is in the 5 ranges. For the majority of the days, I would say 1 hour. If it's trending heavily, daily's nice, but if you're ranging, daily's not really that useful. So probably 1 hour, maybe 4 hour. What makes your model different from the SMC? I think this whole webinar basically talked about that. What is market balance and imbalance? Um, Imbalance itself is generally created where a bunch of momentum candles leave an area and they never pulled back. So if there's no wicks on either side of the momentum candle, you'll have imbalance. Does the system include market sessions? Yes, it does. With our course, you will get access to the timings indicator to help with that. The course is still charging 2,000 on the website. Just checked. I'll have to look. It should be $500, but it will be $500 if it's not. It will be reduced to that as soon as I get off this call and tell my guy. Is the course the full strategy broken down? Yeah, it is basically the backbone of the majority of our strategy. Obviously, the RLS boot camps above and beyond and more advanced, but the course is definitely the basics and can get you started if you're looking to trade liquidity. There are no payment plans. The course will cost. The course is $500. You can see what it consists of on the website. If I'm stop up from obese supply and demand dues, can I re-enter again? Yes, you can. You just have to know what price is doing. So yeah, it's basically understanding about what the market is showing you, and how you can handle things. So that's the core concept. As far as the course still being 2 grand, it is supposed to be on sale for $500. And it's gonna go down to that shortly, guys. So yeah, if there is no more questions, guys, if there is no more questions, we'll end it. You have to click on the first enrollment option to get it for $500. I'm gonna check that out. So for the next week or two, everything should be $500 for the course. And there might be some sort of mistake. I wouldn't worry too much about that, guys. That'll get fixed immediately. It will be $500 for the week or two. Can you say examples of your monthly RR with your strategy? That's gonna come down to you as a trader, and RRs really don't mean a lot. I know guys that make 10R that will make more in a month than the guys that make 30R. So to go off R's is again, there's more to trading than that. There's guys trading 1 and 2Rs that'll make more than the guys make doing 10Rs. You can't really go off R's. I'll definitely tell you it's very profitable. And well, we have members that have literally quit their jobs. We have members that are funded. We have members that are on their way to quitting school because of it. And we're a very small community, and these guys have done this in under a year. Some of these guys came to us and they've been struggling with SMC for however long, just to realize that everything they learned was the reason they were failing. But if you watch their stories, there are multiple funded members. There are people that quit their jobs. There are people that buying their mom's cars and renovating their parents' houses. There's definitely a lot of opportunity for you to free yourself from a 9 to 5 with our system. Obviously, providing you put in the work like anything else. But yeah, you'll definitely make more than enough to quit your job. Even with an 100K funded account, it'd be more than enough. And that's regardless of where you live in the world. Yeah, if there's no more questions, guys, we'll end this, and I will post this on YouTube if anyone wants to basically have a look at everything we talked about. And yeah, guys, I will end it here, and I hope you have a great rest of your day.